In this video, I'm going to walk you through two trade setups that I literally just came out of profiting on both and how you can identify these setups. And I appreciate this is going to be not my normal because it's in hindsight, which I don't usually do. But the reason I want to do it for this one is because at the end of this video, I'm going to show you how you can learn this entire strategy completely free. But first, you have to watch what it's all about. So let's get stuck in. So this is the first setup on the pound dollar. This is the first trade that I got into on Tuesday morning at around 6 a.m. And then just as I started my live trading session, about 8:01, I got into this trade, which is a very similar setup on the euro dollar. And as you can see, they both hit targets. And the thing that I want to get across, the importance in this particular lesson, is the optimization of target taking. And then, as I say, at the end, I'm going to show you how you can learn how to analyze this entire setup so you can go and profit from it over and over again. But let me just walk you through these first of all. So first of all, let's just delete all these drawing tools. You can see that I made the money. I can delete all these off now. My orders are off the table. And what I'm going to do is I'm going to go out to that pound dollar and I'm going to go out to the daily time frame. And what I'm using the daily time frame for is an identification and a prediction of what market's doing and what it's likely to do next. So the first thing is we were in this pullback phase, okay? So you can see we were bearish and we had this run and a pullback, a run, a pullback, right? And on that pullback phase, that's where I want to look for that continuation. And if you haven't watched my Trading for Beginners series, where I explain this entire philosophy around trend trading, you can go and check that out. But what I do first is I check left and I see where we're at in terms of major previous structure. So I draw that lowest low to the lowest close on as a guide, as a zone. And at the time of this pullback, we hadn't actually tested that yet. We were close, but we hadn't tested it yet. And then we had the pullback. So I was betting that the market was going to go down further, even if it was just to test this level one more time. And then maybe we'll flatten out here. Maybe we'll see a reversal here. But I wanted to capture the move down. So as we were pushing up, it was about 6 in the morning. I came to my charts. This is the first setup that I looked at. And as I dropped down to my trading time frame, you can see we had this really nice pullback. The bears jump out the window. The bulls take the stairs. Very common, very, very common behavior in the markets. So when we were pulling up, I started to look at where I could involve myself in a short for optimal risk-reward profile, optimal target taking. And really what I was doing is I was looking at a few zones. I was looking at this zone here, which was obviously the first chance entry, the lowest low to the lowest close of the previous low. And then I was looking at the big zone here, which was the second chance entry, which is basically the big outside return here, right? So anywhere in here. And in that zone, I'm looking for a lower low, lower close candle, all right, which we may or may not have got. We didn't in the end, but that's what we did here, but that was way too late. So I was looking at that level here. And then the last phase is the third chance entry, which is going to be the highest high to the highest close, okay? Now, as we dropped down, as we pushed up into that zone, we started to look for, we triggered into that third chance entry, started to look for a retest, okay? So for that, I can drop down on my lower time frame. And in order to get a retest, I need it to be overbought on the initial test, and then I need an equal test with divergence on the RSI. You can see that we pushed up, we went overbought, we then had divergence on the RSI. The second test was around here, as you can see here. And that's when I got in. And that was about between the 5 and 6 o'clock in the morning when I got in. First chart, I'd enter that market when this candle had closed. It's important that you let this candle close. And then we pushed up, violated the double top a little bit, but then we rolled over. Targets were based on my trading time frame. Stop loss was based on my my entry time frame. So basically, I had an ATR based stop above this high. So I entered here, had an ATR based stop above the high, which came close. And then my target was based on my trading time frame on the 4 hour, which was just a few pips above that low there. So you can see, left a little bit of money on the table, but I want to be optimized to get out as quickly as possible, but maximize profit. Similar situation on the euro dollar. We had a bearish situation here. So you can say we were bearish, right? we had another lower low, lower close, another pullback. I went down to my trading time frame, started to look for the same thing, right? Just exactly the same thing. We had the highest high to the highest close for the third chance entry. As soon as we tip that, I can start looking for that retest. Okay, so went down to the 60 on my lower time frame, got the retest, RSI overbought, divergence on the RSI, and then we rolled over. And my target on this one was at 0294, and I'll explain why, because if we just put in a horizontal line here at 0294, and we scroll back, you're going to see that historically, this is one of my discretionary levels. It's just at, it's 0295 actually. But if you look here, you can see that that is a major level. So optimized targets, I didn't want to fight beyond these levels here that were tested multiple times looking left. I just wanted to get in and out. I didn't want to experience any support or, you know, struggling to hit my targets. So what happened is we was able to get in. Same situation. This was at market. I entered at 8:01 a.m. in front of my, both of these were entered in front of my live room trading guys, and they witnessed it all firsthand. But basically 60-minute time frame, you see 8:01, this was the 8 o'clock candle, okay, and I entered at 8:01. So next bar market. The great thing about this was as well is we had FTB signals. So those of you familiar with my FTB strategy, this was an FTB candle, and also we had an FTB candle right here. So if you got in here, you would have had great profit, really good reward to risk profile, because your stop would have been tight above that high, entry 1 pip below that low, and you'd be trailing that all the way down. That would be something like a, let's see, if you entered here, yeah, you're talking about a 10-to-1 trade, and 2 of those can really make your year. You know, these are the sort of trades that you need a few times a year, and they can be transformative to your trading account, really life-changing trades. So here's the thing. If you want to learn this entire strategy and how to have 4 ways at attacking a trend in the same direction, so same setup but attacking it 4 different ways to maximize your opportunities, all you need to do is go here and watch this series. There's 5 videos on this YouTube channel that take you from start to finish on that entire strategy. Plus you get a load of tools and downloads to help you on your way. So go and take a look at it and let me know what you think. And if you want more videos like this, please let me know in the comments by typing trading analysis. And if you do that, I'll read the comments and I'll consider doing much more of these videos. See you in the next one.